Hi folks, it's Adrian CryptoBirb's speaking. Welcome to today's Friday webinar. Bitcoin surges past $36,000 on certain exchanges, confirming another third wave of the bull market that started earlier this year in January. The pre-election year is soon coming to an end, yet before we still have got November and December, which are the most promising months that you can count for. So let's see what's happening in the markets. And well, without further ado, welcome to today's webinar. Hello, everybody. This is Adrian Zduńczyk, your host for today. Please let me know if you can hear me, if you can see me properly. There are some lags, I think, a little bit on Twitter from what I'm looking at. Still, I think it's going to be beneficial for us to communicate. So if you have any sort of questions as we go, please do not hesitate to drop them in the comments to the video where you're watching. If you're watching that on YouTube, that's cool. If you're watching that on Twitter, that's probably even cooler. Talk to me and we're going to talk. We're going to have some very good, fruitful conversation. So long story short, of course, there is a lot of happening in the market, a lot of happening on the tensions outside of the markets as well. Of course, it sucks for not only the Russia-Ukraine war that is there, that is persisting for, it will soon have been, I think, 2 years in February next year. There is another party, basically, another two parties again that joined the overall war conflict, if you will, right? I'm talking about Israel and Palestine. This is not really good for what's happening. It's terrible things. My good friends are suffering. Their friends, their families are suffering. It shouldn't be happening in the first place, right? Money-wise, financial market-wise, all in all, it is discounted, right? So we as technicians, as the charter market technicians, not only believe this is actually not a matter of belief, of relying on data and facts instead, right? We are talking about not really having the necessity to watch and observe 50,000 different channels for views, reading the newspapers, watching what every single media politician would say, in media. We don't need to observe every single economic factor. Guess what? Because we do have a chart, we do have a price chart, history. And this is teaching us lesson because eventually the price itself is a very accurate index, is a very accurate information from the market, discounting both the facts and the human emotions, right? So altogether combined, again, we get to see a very, I would say, very, very important and promising setup for the next couple of months. So again, if you're watching that on Twitter, please do let me know something. If something is off, if you can hear me all right, if you can see me all right, that's going to be much appreciated. Because until now, I only see that the people are joining. Still, the comments are somehow hidden. So let us try to kick off with a little bit of a news review, right? So the first news that kind of like came, just grabbed my attention was that the Google searches for buy Bitcoin basically spiked almost 800% over the last several days in UK, in the United Kingdom, which is interesting. I don't know, guys, what's happening in UK. Hopefully all the good stuff right now, especially if the Google searches for buy Bitcoin spark, right? So is there a crypto awakening in there? There have been a little bit crypto resistant, if you will, right? A lot of my good friends, got their bank accounts locked for any slightest interaction with cryptocurrencies. So it was not really crypto friendly. The buy Bitcoin searches spike, which is interesting to say at least, as sourced by investing.com. Well, we're going to see where it takes us, but I wouldn't be surprised. And I wouldn't be surprised if it actually takes us higher, right? Because a lot of reasons to make the educated guess that the next moves are upward oriented, right? If you remember, for the past several months, especially since January this year, when I was very vocal about that, there were a lot of comments that this is a bear market, that there was a bear market because the market moved 100% up first, which is impossible to be a bear market anyway. Still, many people then refer to it as a bear market because Bitcoin consolidated for 5 months, between $25,000 to $32,000, right? So guess what? Bitcoin broke above $36,000, right? We just went higher. And so many people would still call that a bear market, right? So the people call it a bear market, and the price just keeps going up, right? So it is a very interesting congestion and confluence, or not even a confluence. There's a lot of dissonance, right? I'd sure dare say cognitive dissonance. And guess what? The greatest amount of cognitive dissonance is in the early stages of market reversals. It is the most denied when we actually do not expect it, right? When we do not expect the market to return, or we are, by mean, we did not expect, just maybe we got caught off guard, but just maybe we didn't manage to get our bags loaded on time. Just maybe, we kind of like missed the train again, right? So when the market turns and we are left behind with no position, we probably try to explain it to ourselves, rationalize to ourselves, well, like why we screwed up, right? What happened? What went wrong? And eventually, to comfort ourselves, to make us feel better, we're probably going to arrive at a conclusion that, hey, listen, this is still a bear market because of this and this and this and this and that. And what we do is go and search on Twitter to all the media posts that are saying bear market or winter, or you would go and search for crypto influencers that are basically telling and repeating the same mantra that this is a bear market. But guess what? They are most likely up for a surprise again, right? And there are people who have been holding on to their views for a very long time, even though Bitcoin has been going up for 10 months straight on average to the upside, right? Is this really a coincidence? Can somebody accidentally continue to buy Bitcoin for 10 months straight, not really realizing what they're doing? Can a $500 billion asset move up for 10 months straight due to the coincidence? I may be wrong, although in my opinion, not really, right? So long story short, the facts and the data are there. I was hoping, you guys, that I was hoping that you would be able to see again the information, the facts, rather than emotions, right? So speaking of facts and numbers, again, let's actually highlight this. 826% growth on the Google searches. It is merely a fact, merely a non-core to just take a look at. However, what's more important, like I said, it's what the markets are doing, because that is eventually what is telling us the people's expectations, right? So if we do take a look on the Dow Jones Industrials, it's down almost 1%, breaking below the 33,000 point support, which is on its own not really too good. Let me just take a look real quick if everything is seen. Yeah, so it's not really good on its own. We are breaking below, I think, much more important levels, because eventually it's let me take a look real quick. What is going to take me? Yeah, we are breaking to the levels basically. Well, I wanted to say not lowest in the year, right? Because the lowest were basically in March, April. The lowest since March and April. So this is a 6-month low, if you will. That is not too good, is it? Overall for the stocks, right? So there are a lot of, again, remembering that this is the 94th anniversary today for the Black Swan crash, for this overall 1929 great recession, right? Great Depression. It's not a good anniversary to celebrate. Either way, what we're looking at again is the market following this classical typical seasonal weakness, right? As we head to the next week and to the next month, we are most likely heading to the more bullish season, right? Because eventually the whole quarter three price action is slow. The people take time off the markets. They would go and just take a chill pill, not really trade, and spend too much time in front of their computer trading desks. They would so much more enjoy their life. They would go on the vacation. They would take time off, which translates to lower activity in the markets, less volume, less price cushion for the supports, the less buying power basically coming in from the buyers again. Hence, the prices do not really have much incentive to go through the roof. Still, it is seasonal. There are seasons in the year when the market just moves better, moves more likely to the upside, and there are seasons when it moves to the downside or sideways. So that seems to be the very in line with the expectations with the seasonal weakness, because eventually, like I said, July, August, September, and October, those are the typical bearish months. And as a matter of fact, the whole six best 6 months and best and worst 6 months seasonal strategy with the timing indicator like MACD, moving average, convergence, divergence, by my good fresh friend Jeff Hirsch. Shout out to him. It's at Almanac Trader on Twitter. Go check him out. He's very vocal about it, right? And that's the strategy that's been going on for ages. The best 6 months and the worst 6 months is what for S&P 500 does. If you heard ever of this seasonal pattern, sell in May and go away, this is what it actually is, right? So let me take a quick look real quick. Okay. It seems that everything is running smoothly. So the best 6 months are from November into April, and the worst 6 months, if you heard of sell and May go away, then this is actually true, because the sell and May go in pattern intensifies eventually and kind of like just moves to the worst, for the worst 6 months for S&P 500, or for Nasdaq Composite is going to be best 8 and the worst 4, right? So the best 8 are basically from November through June, unlike April from the S&P 500, and June through, or I should say July, August, September, October are the worst 4 months, right? So the whole July, August, September period is a little bit of a similar play, and puts very often the yearly low, and the cycle low for in October's, right? The market started growing and bottomed out last year in October. October is a typical turnaround month. We're gonna see if it repeats itself this time. However, there is some local weakness. Still, if we do follow the trends, because prices tend to fluctuate below the averages and above the averages without too much significance quite often, because there are a lot of noisy movements, there's a lot of volatility, there are a lot of local narratives that just disappear over a certain period of time. What matters is the direction and the slope of the moving average. So the long-term moving average, the 200-day trend, is moving up. This tells you that this is a bull market, even though you're seeing consecutive third, kind of like a secondary tide to the downside, an actual trend, if you will, according to the Dow theory. It is a corrective tide. It is some sort of like a corrective tide, not because I say so, but because the bull market is on. It's not because I say so again that the bull market is on. It's because the line telling you if it is a bull market or a bear market, it keeps moving up still. So when it finally turns maybe to the downside, maybe it's there when the bull market is not on. Until then, we're looking some local fluctuations that are full of noise, that are again just some seasonal weakness, like I said, that are in line with the expectations. And per the very good seasonal studies of my good friend Jeff Hirsch, the last days of October are the best buying opportunity, basically right ahead the best 6 and best 8 months for the stocks. So the sector ETFs, consumer discretionary is up 1%, which is positive, because those are cyclical stocks. They move up whenever they should be moving up as the main dominant tendency whenever there's a bull market, unlike the stock sectors like utilities, like healthcare, right? Like consumer staples. Those are the defensive stocks as well, with the energy somewhere in here. The energy is down as well. The energy is kind of like, again, just pulling back for, I think, the 5th time towards the same moving average. It is a slow, very slow pacing bull market. Still, the bull market is on because the price moves, the 200-day moving average just continues to move higher. However, it's a very slow pacing market. It's a very slow pacing market. So the fact that the technology, the risk on environment, as well as the consumer discretionary XLY, so the people, it's a matter of a choice that investors make, whether it's things that we need or the things that we want. Things that we need in consumer staples, the basic goods like food, beverages, clothes, and so on. While the consumer discretionary is what we have upon our discretion, what we choose to have, right? Rather than what we are forced to have. So if you choose to have something, you probably do choose to have it because you have a good prospect of what's coming ahead, because you can afford it, whether putting it in your own private context, right? If you do not have money or do not feel good about spending big amount of money, you're not going to buy a car. You're not going to buy a Tesla. You're going to buy a Tesla if you believe you have enough money to pay it off, or you basically have good in financial situation to just buy it, right? So yeah, the fact that they're in relative strength today, rising, while basically all of those other market groups or market sectors are down, it is a more bullish thing than bearish, right? Funnily enough, for airlines, XAL, a very beautiful downward trend. It just keeps going lower. This is a little bit of a fun fact. The bonds, 30-year bond prices, of course, driven by the investors' expectations, they also continue to move to the downside very aggressively and very consistently, very much, right? The 200-day moving average just continues to move lower. 50-day average continues to move lower. 20-day average continues to depart even further to the downside, against against the 50-day average, respectively. So this tells me that as short-term acceleration to the downside, the downward trend is getting deeper, right, and it's getting more aggressive. The 30-year bond yields, right, by the TYX is 50.41, sorry, excuse me, 1% up today. TNX is 0.54% up, 38.71. So 30-year bond yields, at 50. Close to yearly highs. The TNX 10-year yields are also close to the yearly highs. They're kind of like just moving here. There is a lot of congestion, I would say, between 48 and 50. It's not the most bullish congestion, if you will. However, the averages are up. If the averages are up, the dominant trend is up as well. So I wouldn't necessarily counter trade that. Gold and silver. Gold is close to, I would say close to the all-time highs, right? 2075 are the highs, 2080 are highs. We just kind of like snapped, I think, the equal or higher high again versus the August earlier this year after this local fake out, if you take a look, right? So there is a lot of bullish implications, and all of the moving averages are moving up. The gold is in a very well-defined bull market, and it continues to move up, and there is a bullish crossover for 20-day bulls versus 200-day bulls, right? So eventually it tells you that this is another spike, another wave, another tide to the upside, right? And even if you take a look at the bull market trend line, the corrective trend line connecting the consecutive lower peaks, eventually there is a decent breakout, not only but over the moving averages, which kind of like just cluster around 19, 25, 90, 50 to give you some good support. They all kind of like just align well with, like I said, this trend line breakout. There's a lot of bullish confluence, it seems. Cryptos, I'm going to move to cryptos. Overall, it's a little bit of a mixed picture if you take a look, right? Because we have a couple of reds, we have a couple of greens. Bitcoin is 1% red, 33,700, some locally broken, after a very powerful surge past, again, 32,000. So that was a massive snipe. 30K is not sliced it like it's nothing. 30K through 36,000, almost 20% sharp move to some exchanges. It was a powerful rally to observe, regardless of the actual reasons. It gave you a very promising setup. And dollar, right? The dollar is actually, again, just locally slowing. It's moving in a sideways environment, even though locally, again, there's been this local breakout to the upside above 106. All the averages are moving up, which tells you that the dollar is bullish. However, it's slow. The upward spike, the upward trend from July until it peaked, in mid-September or late September, I should say. Now it's moving sideways right now. We'll see where it takes us. Now, if there's a breakout, it may actually slow down and just pull back to the average. Otherwise, I would see that the trends tend to persist more likely than they are to reverse. So just maybe there is a way for the dollar to continue higher, which is not so much of a good impact, I should say, right? Eventually, UUP, the big dollar bullish fund, you're looking at a little bit of a cleaner picture. The trading range that's happening between 29.60, if you will, to 30. approximately. Well, it's really moving sideways, right? So again, positive sharp spike, and it's moving sideways. So it's a little bit of a brief moment for the dollar. We'll see how it happens. We'll see where it goes. Although the trends are more likely to continue. And the VIX has spiked a little bit higher again. The volatility implies the implied volatility index, which tells you what people kind of like fear of happening about 30 days ahead, right? What volatility they're implying, what volatility they're expecting 30 days from now. This is coming based on the put and call ratio and a little bit the number of the S&P 500 puts, for instance, right? So watching the option market, the derivatives market for the options for the S&P 500, may actually tell you a little bit about the market expectations as well, especially if you take it on the options. So long story short, again, we've got all the markets, right? And it's important to account for all of the markets, mainly because Bitcoin doesn't trade in vacuum, right? Because Bitcoin doesn't trade in vacuum, we do need to respect the other areas of the markets. And just like that, the intermarket technical analysis promoted so heavily by John Murphy. If you don't know John Murphy, he's the legend. He's written so many books. I think I might be wrong, although I wish that he's still alive, right? And I think it's going to be close to 80, 90, if I'm not mistaken. Again, you might want to look it up. Still, this is the first go-to book, like a technical analysis Bible, if you will, that every beginning trader would just go and take up as the first position to read. And he was the pioneer in its own way of propagating simple systematic approach to technical analysis. And then he wrote a couple of very good, interesting books about the intermarket technical analysis, how all the cycles, how all the other different markets just correlate together. It's a very interesting read. And that basically translates again and transpires to the reason why we observe Bitcoin, for a little bit more information to understand the context. However, regarding trading, we do not need anything else than just the Bitcoin chart, right? So having a little bit of information, if you are to make any educated guess, the more information you discount, the better, right? So you do not want to kind of like just get stuck on Bitcoin, and you want to observe something else to just really know what's happening, know what's buzzing. Still, if it comes down to trading, not making any educated guesses about trading, calculated trading with risk position size, with risk management, the position sizing approach, and profitable backtested proven techniques that work, then altogether, all you need is just a Bitcoin chart. And before we head there, I've got a couple of other points, right? So literally 1 month ago, Jeff Hirsch, again, Almanac Trader, put out the first article, the first accredited ever Bitcoin seasonality article, right? And there we featured for the first time this remember to buy in September, the seasonal pattern that we discovered. Remember to buy in September. This was the alert, the main message of the seasonal article, following also the Bitcoin's 1 year seasonal pattern that Jeff put in nicely. This is his great chart. And what you can see is that Bitcoin typically follows the Nasdaq's seasonal weakness. Like I said, July, August, September into October. This is where you typically see the seasonal weakness. However, the 4 months, the best 8 and the worst 4, coming together with the seasonal low in late September, which is what it exactly pretty much did, right? Because ever since issuing this alert on remember to buy in September, Bitcoin has gained approximately 30%, 40%. Now, from literally, again, 60 or even more, all the way to 200, 110, there's a lot of very good positive numbers that just flow in. And now Bitcoin shows some decent resilience around $34,000, just refusing to go much lower, right? Maybe it will fall lower, maybe it will fall to 32 to 33, whatever. All that I mean is that so far Bitcoin has held up nicely, $34,000. And the main message is that ignoring the seasonality can be a very expensive mistake. And I do highly request maybe yes, though eventually recommend that you go ahead and follow Jeffrey A. Hirsch. Jeff Hirsch is my good friend. He's the CEO of Hirsch Holdings as well. Great godfather of seasonal studies. Himself and his late father, Yale Hirsch, basically are the fathers, the creators of the seasonal studies. They were the first people to actually approach it. and promoted. The 100th birthday, he came up with the Santa Claus Rally January barometer, best 6 month strategy, all invented by Yale. On what would be his 100th birthday, market seasonality in the 4-year presidential cycle elections are alive and well. Belated happy birthday to him as well. Besides, Bitcoin has gained 27% in October so far. Okay, from the October start around $27,000 all the way to $36,000. So there's a lot of movement. Again, $500 billion asset moves 27% or 100%. Is that due to a coincidence? Not really, right? It cannot be a coincidence for somebody to buy $100 billion of Bitcoin, for instance, right? I cannot imagine somebody making a mistake and mistakenly, just by accident and coincidence, managing such a big money and just basically saying, "Whoops, I just spilled all my portfolio, all the client's funds into one asset without any slightest control, and I'm just gonna hold it because I say so for a long time." This doesn't really happen, okay, due to coincidence or chance. So historically, what is important is that November is 3 times as bullish as October. October typically averages out approximately 15%, while November, kind of like the average monthly performance gains, performance or gain for Bitcoin is about 45%, right? So per the data actually that we have and that we own, the average monthly performance Bitcoin for October, again, we are somewhere close to here right now, to 27%, 27%. So we are outperforming the typical October behavior. Still, what matters is that historically November is the best historic month of the year for the stocks and for Bitcoin. And because Bitcoin's correlation with the Nasdaq, with Nasdaq stocks, with S&P 500 just grows over the time, it tripled and quadrupled over the past 5-8 years, if you will, then it pays off to not ignore the seasonality. It pays off to not ignore the correlation, because the correlation, understood as the covariance ratio of covariance, how Bitcoin and S&P 500, or not Bitcoin and Nasdaq, co-vary, move together and change together against their product of standard deviations. This is what the correlation coefficient is, basically, right? So if you observe those, you know that Bitcoin has been really lately negatively correlated, strongly negatively correlated. So if you will, it kind of like plays the role of a hedge, if you will, when the whole Israel and the Palestine conflict kind of like re-emerged again. So I have another chart in here, the main chart, right? Which is exactly what I'm saying about the correlation. The correlation here, it's extremely low. It's, I think, the lowest actually it's been since 2019. Boom, there you go. So that is a breaking thing. That is a record worth noting. Since 2019, I'm gonna make a tweet about that. Since 2019, we've only had one instance, and it's today, that Bitcoin was so aggressively correlated with S&P 500 on the negative side, inverse correlation, negative correlation coefficient. Very interesting point, right? This doesn't happen, like I said, too often. The last time it happened, it was in probably June 2019. And 2019, by the way, was a pre-election year as well. Pre-election years are the best performing years on a record. Very interesting point. Okay. So we've got this, right? So again, if we are to close around current levels, above 32,000, like 34, 35, maybe 36, knowing that October, the best trading day for October is actually tomorrow. We're going to see how it performs. The best trading day of the year is tomorrow. Yes, the best trading day of the year is tomorrow, October 28th, for Bitcoin. Maybe a little bit of a hint for what to expect tomorrow. We'll see. However, if we know that November averages approximately 40% gain over the past 13 years, right? Then if we close here, then if we take a little bit lower, like I said, just for the sake of rounding down, 40% move, 40% gain, even though the average is higher, 40% gain, a little below the average, and take it from where the closing price is and when the opening price of the next of November is, then it places us somewhere in the proximity of $50,000. Right? Is that crazy? Maybe. Though, like I said, markets do not make much sense. Maybe it's crazy. Maybe it's exactly what the market will do. Who knows? Right? The call to action here is let's let the market decide, and it's actually true. Right? We only can guess so much. And I've got two more stories to kind of like give you guys. Something to consider, because this one is institutional bias versus the law of the diminishing marginal utility. Right. So this is a piece of an article again that Jeff and I put together a month ago. And what I talk to institutions, when I talk to hedge fund managers, when I talk to the family office wealth managers, to some rich people, they would often be averse to Bitcoin. They would very much often be, they would often say, hey, listen, like this is shit. This doesn't, it's not worth anything. It doesn't have any value. So I asked them why they say so. And they only say so with response, hey, listen, because it doesn't generate any cash flow. It's not backed by it's not backed by real company. It's not real, if you know what I'm saying, right? So if that is their only response, there's clearly prejudice. And prejudice is a bias. It is a conservatism bias. It is cognitive dissonance. So you would just hold on to your prior beliefs without even a mere attempt of updating them when you're thrown facts, when there are facts thrown at you basically all the time. Right? So if you give them the numbers, maybe they can take them in, which is why I exactly created this article in the first place. Still, the mainstream media and traditional pundits claim Bitcoin has no intrinsic value. Ironically, the biggest hedge funds fall for the same basic biases as an 18-year-old kid flipping a coin. Because eventually, when you flip a coin and the coin lands five times tails, or six, 7 times tails, then most of the people would mistakenly start believing, hey, maybe I figured this shit out. Maybe I'm the best coin flipper in the humankind history. Because what is the other explanation, right? The explanation from the statistical point of view is luck. Luck is a deviation of chance. It's something that shouldn't be happening, but it's beneficial and it's happening. It's something that goes as the gift from the heavens, as the gift from the environment, as the gift that you get unexpectedly. That shouldn't be happening, yet it's happening. It's like when you find a pile of banknotes, a pile of cash, okay, a brick of cash in the middle of a street. It's not because you're the luckiest person on the earth. It's not because you are some genius. It's luck, right? So this is something that shouldn't be happening, yet it's happening, against the theoretical reasonings. So anyway, right? The fact that we can guess something right 5 times in a row doesn't make us genius. It may be just due to the luck, especially when it's a coin flip, when you have 50-50 chance. So on the other hand, it might have to do with the risk aversion profile and the law of diminishing marginal utility. So as a matter, this is the chart that I'm talking about, the law of diminishing marginal utility. This is a concave curve, and basically the utility, the actual, call it happiness, satisfaction, the joy, whatever utility you would have out of money, it would change with how much money you have, because the more money you have, the less happy you're gonna be with the same amount of money gained, right? So if you have $100 on your account and that's everything you have, if you win another $100, this is gonna take you over the moon. You're gonna be over the moon. You're gonna be happy. However, if you have 50 billion on your account and you win $100, this is gonna be nothing for you. This is gonna be just dust. You don't care, and it's the same banknote. It's the same money. It's the same nominal cash, basically, right? So depending where on the curve you are in terms of the utility and wealth, the risk aversion curve for the concave, well, it matters where you are basically. So the more money you have, the less risk you're gonna be eager to take. When you think about it, like the big institutions, those 50 billion funds, like I said, those 100 billion funds, the BlackRock, all those people, who are very rich, they don't need 100x. They don't need 10x. They don't need 500x. All they need is 5% or 10% every year, and they're going to be happy because 10% out of 50 billion is 5 billion. If you get 5 billion a year and it just continues to growing because it compounds, isn't that a good deal? You don't need to reach out for 100x. You only need to reach out for 10% or 7%. Right? So the more money you have, the less risk you're going to take. So it is understandable that they might be a little bit averse and not choose Bitcoin because it's too volatile, right? So that is on one hand understandable, like I said. However, eventually when you throw facts at Bitcoin is very popular mainly because it grows very much, right? Maybe it grows very aggressively. Again, from the halving peaks, from the halving moment, from the first halving in 2012, it went 90x to the first peak. To the second peak in 1250 before it moved lower to $200. Second halving gave you from what was that? The approximately $500, if I'm not mistaken. It would take you from $500 all the way up to 20K, right? Regardless of what the halving price was at that time, it returned somewhere approximately to 30x. So 90x to the peak, 30x, and from the May 2020, which was the third halving, it peaked to basically it's around $70,000. It generated this 7x return from the halving to the peak. So 700%. Okay. Well, who knows where we're going? Who knows where we're going? Maybe we're gonna go higher. Maybe we're gonna make new all-time highs. Maybe we're gonna go $300, 300,000. Maybe we're gonna do 77 and just blow up. Who knows? I don't know the future. No one knows the future. We cannot ever promise to predict something with 100% certainty. It's impossible. It's impossible to know that, right? Still, what I'm trying to tell you is that if you have a chance of earning 10% and reject a chance to make 700% that is reliable, consistent, and just repeats in some similar fashion of patterns, then that's not common sense, right? We would reject making 700% of a more reliable data fed choices, and we would choose 10% just because we think that Bitcoin is dirty, or that Bitcoin is promoted by scams, or that Bitcoin is part of whatever mafia, like Cash wasn't part of mafia, right? So what I'm saying is that Bitcoin is all about the opportunity cost because it grows very aggressively and very fast. And time after time again, Bitcoin always rallied hard after the halvings, always rallied hard. 90x, 9,000%, 30x, 3,000%. 700%, 7x, right? So even though there is this diminishing returns over the time, eventually from the halving price to the peak, Bitcoin never turned back to the halving prices, which means that everybody who bought earlier at the halving price, at the halving time, they are all in profit. They're on aggressive profit. They're on better profit every year. So Bitcoin always rallied hard. Those are the facts, not my opinions. I'm not sharing my opinions. Those are facts, something that already happened, 100% certainty. 100% likelihood. Just maybe it's better to rely on the facts while making big money decisions. So again, rejecting the facts for choosing a more convenient, more comfortable 10% is not rational. There's a lot of prejudice, bias, fear, right? So eventually, those are institutions. The institutions are people. Institution is an agreement, is a facilitation of an agreement, a contract, contractual obligation between two parties, two entities. Institutions are people. The people who fall for the same mistakes, who fall for the same biases, like an 18-year-old coin, 18-year-old boy or girl flipping a coin. Right? So again, the law of diminishing marginal utility, again, is just like I said, that the marginal utility diminishes over the time because the marginal utility as this risk appetite eventually just grows. Grows the less money you have, and diminishes the more money you have. So like I said, trying to force the utilitarian value of Bitcoin into the traditional stock market model is a cognitive error, is a cognitive mistake, cognitive fault. Okay, There's a lot of disbelief, denial, conservatism, representativeness bias. Like I said, when we try to incorporate the new information and put it in the old frames that we already know, right? So that is something that is not rational, and that's maybe why they would choose for 10% return over 700% return, for instance. So yes, that's true. Many coins and tokens are scams. Still, nonetheless, isn't it unwise to ignore the momentum of a $1 trillion industry as a crypto as a whole? Bitcoin's highest volatility and its tech stock correlation of up to 4x since 2015 make it an attractive alternative for more risk-seeking traders, and they get more freedom. In the end, who likes missing the spectacular pumps? Right? How do I turn this one off? Anyways. So that's the story. That's the story. Siemanko, Igor, cześć. Edward Garcia, very good. Thank you for joining. What's up? Thanks for joining, everybody. So I've got one more information, one more message for you before I disconnect. Again, I do hope that you guys are taking everything lightly on your end, that everything is fine, and that you're happy where you are, that there's a lot of joy. Tragic Garlic, love the name again. Great dog in the picture. Thanks, Burp. I love watching those streams. Much love to you as well. Thank you. One last point, because we have a lot to celebrate again. Every year we would put out the free virtual summit for traders, and it's coming together this year again, November 15th through November 21. You're gonna get all the incredible value to learn profitable trading for free. It's going to be free for every single person who raises their hands, every single person who declares their interest, that they want to learn for free for 7 days straight or more, to come in and participate in special workshops, to come and join special time with unlimited free signals access. Or you want to be basically part of the community, learn behind the closed doors with no trolls involved. You want to get up on your feet faster, but you don't know how. You do not have really enough of education, of psychology experience, and so on. We're going to open the door for you, for every single person, for free. No charges included. Every single thing is going to be free. And you get a free premium trading group access, right? So like I said, if you want to learn, if you want to improve, then you might want to look up Free Trading Congress, because it's coming, the 5th edition of Free Trading Congress. Every year, thousands of traders just come in and claim their free access to our premium trade group. Free access, that's correct. And like I said, you can take a look at you can look at it from the perspective of giving back to the community. It's my gift. We could probably not do it at all, or like most of the people wouldn't do it. Though we decide to do it because we love giving back. It's the time to celebrate you. It's the time to celebrate the community by giving you everything you need to get back on your feet faster, to get the special profitable guidance, to get all the trading systems, all the indicators that you need basically to make your life a little bit easier as a trader. Maybe you want to learn how to become a profitable trader soon, and a full-time trader. Maybe your job sucks. Maybe you hate your job. Maybe you hate your life, whatever, right? Of course, those are the bad things. Still, consider this opportunity to go and improve it and make it better for free. No one's going to charge you. Have my word and promise. So if you want to take this one, right, then like I said, for a limited time, I'm giving free access to my private trading group, the Birb Nest, for everyone to learn profitable trading. To be eligible, just need to throw a like, share this post, and join the waitlist. So that's right. This is the pinned tweet, the pinned post that I have. So the only thing that you need to do is to like this tweet, share it, and join the waitlist. And the waitlist is in my bio. If you go ahead and click it in the bio, then that's going to take you to join the waitlist. You just need to agree to terms and conditions and join the waitlist. And when the waitlist starts off, we want to give to everybody the free fair access at the same time. So there's a whole waitlist, and we're going to allow and let everybody in at the same time. So just go ahead, click on the link in my bio, like and share the tweet that is in my pinned post. Again, pinned post information, like, share, join the waitlist with the link in my bio, and you're going to be on. You're going to be set up for a great party. And that's the gist. Probably That's pretty much right, Victor. You're one of the very few ones, right? So this is a lot of, again, a lot of gift to the community, a lot of appreciation to everybody who's still there. You guys are gonna make it. You guys are pioneers. You guys are here when the market is in the early stages of the bull market. You guys are the people who the other friends of yours are gonna come in and say, "Hey, you were lucky for buying Bitcoin this low, and this early." They're gonna come. They're gonna come and tell you this, and it's no luck. It's you who show up here every day, struggle hard, make your make a job, do your job. Like I said, make all your dreams come true. It's hard work. It's hard work. Stevens just says, Steven Daniels, shout out to you, my man. Signed up. That's a very good approach. Again, pin tweet, like, share that we join the wait list. We're gonna let you in, everybody, with free private trading group access, free, 7 days free. Not only is the typical thing, but you're gonna get a free access. You're gonna have a chance to sign up forever for premium signals as well for free. Celebrate, come join us. This is the celebration of community. And that's been Adrian Zduńczyk, CMT, talking to you as your host for today's webinar. God bless you all dearly. Hold on to your family. Say that you love them. See you on the next one. Bye-bye.